All right. Welcome to the Real Money Coach. Listen, it is Tuesday, 8 p.m. Eastern Time, and we are live. And I am glad that you are here on Facebook, YouTube, whatever you happen to be watching us on. So it's a exciting day for us because it is March 22nd. It's one full month since the book launch. And I'm still fly high on that, you guys, still enjoying all that happened there. And I just want to just in the chat, put in the chat where you are watching from. Y'all know how we do. Put in the chat what city, what location you are watching from. Let us know. We got Dr. Bonita Harris from the Queen City, Charlotte, North Carolina. Who else is out there? I see y'all out there. I know you're dialed in. Let's get active in the chat. Let me know where you're watching from. All right, we got another person from Charlotte, North Carolina. Who else is out there watching? All right, good evening. Ruth Bell is in the house, and I got some answers for you, Ruth Bell. We are going to talk this week. All right, who else we got watching tonight? I know you guys saw the email that went out, the social media posts, Facebook, LinkedIn. We're going to be talking about taxes tonight. Whoo! Listen to that. Human Torch, Youngstown, Ohio. I believe I know who that is. Vernell and Rhonda Mitchell from Winston-Salem. Good to have you. Oh, we got M. Curtis all the way from Baltimore, Maryland. Kimberly McGuinn from Charlotte. Alice Martin from Charlotte. Y'all coming in. Hey, I appreciate y'all getting in that chat, letting us know where you're watching from. So awesome. Great topic for us tonight. I do want to do this. Well, let me tell you guys, because you guys are probably going to be expecting something. I figured that was you, Elmer. I knew that was Elmer, Human Torch. I knew that was you because Youngstown, Ohio. Thank you for being here, Elmer. I appreciate it. Facebook user from Greenville, South Carolina. I bet you I'd be willing to put money that is Adele Ryan from Greenville, South Carolina. Listen, there is so much going on in terms of news. I don't know if you guys have watched any of the news reporting on our new, well, I guess nominated. I guess, that's the proper thing to say that Kataji, if I'm saying that right, Brown Jackson. I can say Brown Jackson, right? I tell you that for sure. I can say Jackson. We're going to have a Supreme Court Judge Jackson. I do believe it. Very interesting process, right? To see this line of questioning and how, it's kind of on political lines and all that. Politics is something very interesting to me. It's like, some people, their politics and view of the party is so strong that it like trumps even common sense sometimes. I don't know how you guys feel about that, but that's what I'm saying. And look, we got Benjamin Bryant from Columbus, Ben Bryant from Columbus, Georgia in the house. And so the big news items to me that's going on right now, and you guys tell me if you think, what do you think? What do you think are the big news items? I think the Supreme Court justice is one. Obviously, our hearts and our prayers go out for the victims of the tornadoes that have taken place in Texas. Michael Christian said, common sense is not common. I think even Tony Dungy put that in his book. Love it. So our hearts and our prayers go out for the victims of the tornado that took place in the Dallas area. And then also, it's reports that those tornadoes, there's I think I saw 12 or 18 active tornadoes. Look, there we go. We're going to swear in, right? I love that. So we're going to call her Supreme Justice. We're going to call those things that are not as though they were. Supreme Court Justice Brown Jackson. I like that. And then we have with us tonight. Also, Jay from Asheville, North Carolina. So, and then of course, y'all know what time it is. It's March Madness. March Madness. I don't know if you've been watching some basketball games, but I got two teams. I think they're both still in it, right? I'm talking about two teams. Anybody know who my two teams are? Put it in the chat. Y'all know me. Who are my two teams? Think about that one. Who are my two teams? Who is the Real Money Coach's two teams, right? Guess who my two teams are. Nobody put a guess in the chat yet. Yes, come on. Somebody tell me. Who are my two teams that's still in it? Let me tell you who my two teams are. One of them is Michigan. All right. Juwan Howard, I want to see them do well. He's still in it. So Juwan Howard is still in it. So that's one of my teams. Guess what my other team is? Michigan women's basketball. Okay, so they're still in their tournament too. I think they're still in it. I might be wrong, but I don't know where Chad is tonight, but my man Chad is a big Michigan fan right along with me. So we're just happy. I mean, the tournament is like, I love the tournament because it's like win or go home, right? Win or go home. And so that is, I love those stakes, and, just hats off to, and I know you guys probably seen the big hug and the consoling. There you go. I mean, my man Dante, man, what can I say about this brother, right? Listen, and so, everybody talked about him when he, reached over and kind of, slapped the guy across the head. He shouldn't have done that. We all know that. But then, it went viral, him consoling the player from the other team, Tennessee, I believe it was, the other night. So that was good to see. Compassionate story there. And so make sure you guys are staying up on things. Let me tell you what's going on the iHeartRadio show coming up this Friday. As you guys know, that's every Friday at 5 p.m. Eastern time on WDRB Media. So if you go to WDRB Media, and this week I am going to that show, Cynthia Daye from Durham, North Carolina. Somebody on my show tonight, Cynthia. Good to have you here. But on my radio show, I do really three segments, right? One is called Real Money News, and that's where we're talking about current news items. What I'm going to talk about this Friday is I'm going to be giving you 5 tips to save money at the gas pump, right? 5 tips to help you save money at the gas pump. And then for the interview section, and I usually divide that up into 2 parts. The interview session, we are going to be replaying some of Dr. Dennis Kimbrough's comments from the book launch. And he was explosive. I mean, I thought he just laid down some nuggets that were absolutely awesome. And so we're going to be replaying his commentary, his notes, his nuggets of wisdom from the book launch. And then in the Real Money Moves is where we give different tips and that type of thing. And actually, I'm going to be going over a little bit of chapter 2 from my book, which is about the stock market, because that's the other big news that's happening right now, is the fact that the stock market is doing this up and down type of thing because of the war in Ukraine. That's also affecting the gas prices. And so I'm going to talk a little bit about chapter 2. And so make sure that you do subscribe to our YouTube channel, subscribe to our Facebook group. And also, if you have not ordered your copy of the book, you can go to ipadyourmoney.com and you can order your copy of the book. And I think that's all the announcements for the rest of this week. And then coming back next week on this show, we're going to have a segment about financing, or the road to education, paying for education. And so we're going to have a guest on that's going to be talking about paying for college education. And so you do want to be here. Brad Hudson from Cramerton, North Carolina. So good to have Brad here. I think Brad is probably at work, so still tuning in to the live show tonight. So my co-host, Michelle, she done ditched me tonight, y'all. She's on vacation, her and her family. Actually, we spent part of the weekend with them, had a wonderful time, as our families do when we normally get together. And so just great friend, you know, as you guys know her, my wife, our best friends. And so we had a great time with Michelle, Tony, which is her husband, and then myself and my wife, Elisa. So, and then also Derek Clement, Michelle's brother, and his wife, Thomasina, were there, her son and her daughter and daughter-in-law. So anyway, we had a great time down in Myrtle Beach, enjoyed some good food. It was cold, it was a little chilly, but you know, we had a good time, played a little golf and that type of thing. So, but Michelle will be back with us next week. And then there's a couple weeks in April that I will be out of the country. Michelle will be filling in. I guess I need to ask her about that first, though, right? Okay, Michelle, you're filling in. If she watches the broadcast, I just announced it. Okay, I don't know. She might be here with another guest, or she might be Lone Ranger. Anyway, tonight, I'm excited about our guest. This is a brother, man. This guy is coming on tonight. It's amazing. We have these great conversations, and we find out we have so much in common. His name is Timothy Daye. Timothy Daye, and he's going to come on and he's going to be sharing some information with us as it pertains to taxes. And as you guys know from my social media posts, emails that went out, 27 days, y'all. We 27 days away from tax time. So if you haven't gotten your taxes done, you need to get on the giddy up, because you only got 27 days. That's less than 30 days, y'all, to get it done. And, you know, what I was kind of concerned about, and I'll talk about this with Timothy when he comes on stage with us, is that, you know, for the last couple years, the IRS have extended the filing deadline because of COVID. Don't be banking on that. Don't be banking on that this year. Timothy will certainly tell us more about that. But let me tell you about Daye Financial Enterprises, established in 1995 to assist area churches with accounting and bookkeeping needs, including submission of quarterly payroll, tax filings, reporting of compensation to employees and independent contractors. And we'll talk about this with Timothy, because I used to be a treasurer at church. And man, we need it. We need it. We need to get our churches doing things the right way. And then he expanded the business to include personal income tax preparation, and also to help grow life and health insurance coverage, financial education, and literacy. Now, this is a smart man. He says, I want to thank my wife, Cynthia, for all of her love and support. Now, I know my man is smart now, because you got to do that. You got to let him know. You got to let your queen know what she means. My wife I couldn't do any of this stuff that I'm doing without her. I'm going to just tell you like it. TIS is, right? That's the way my mother used to say it. But without any further ado, let's bring on my boy, the incredible Timothy Daye. Man, Timothy, you got a applause, man. What's going on? How you doing?
That's all right. I paid Dante in the back room to take care of the applause for me when I came on. So,
well, and it's well deserving, I might say. Timothy, I don't know how long. I don't know. We've known each other now for what, maybe 2 years? Would you say 2 years?
I'm approaching 2 years. This July make, I think, 2 years.
Yeah, it makes 2 years, and we just become friends in this process, and I have a lot of respect for what you do. I used to do a little bit of what you do in terms of taxes, and I gave it up, though. I had to give it up. I had to give it up, brother. I had to give it up. So, but we're glad to have good tax professionals, accounting professionals out there like you. So, man, just tell us a little bit about you and your journey, and how you got to where you are right now.
Yeah. Well, as you mentioned in the introduction, this started Day Financial in 1995, and being active and involved in my church, I was on the trustee board, and so finance was one of the things that I was always interested in. So I happened to attend a workshop in Greensboro with William Thompson that talked about church and tax law, and found it to be quite fascinating. And so that's where I sort of introduced or became involved in church finances and working with churches in the area. And from there, it just expanded to doing taxes. And as you related in your introduction, when you were talking about, the political process and those types of things, oftentimes it's accountants or people with a financial background that typically prepare tax returns. But truly, taxes are a matter of law. They're not necessarily financial plannings that go into tax preparation, but they are matters of law. So tax law is forever changing, and being a part of that political process is important in terms of selecting legislators that will establish fair tax laws. And so that's one of the things that I hope the audience tonight would take away, that being aware of your legislators is important in terms of making sure that we have tax laws that fairly represent and that we're paying, everyone is paying their fair share. And so I've begun to expand to include other services now, and taxes is one of the things that I get involved with on a regular basis.
Well, it's so interesting that you say that, because what you basically have at state legislators, the local, the state, and the federal level, is you have people making laws, including tax laws, with no accounting background, and then they say, "Here's the law, y'all go implement it." IRS,
Yeah,
you implement it, you enforce it, and that is a very interesting part of that. I'm glad you kind of brought that out, because it is important. So as we are starting to see, I don't know about in different areas of the country, but I know here, particularly in North Carolina, particularly Charlotte, we're starting to see these political commercials already,
yeah,
endorsing certain candidates, or I guess misendorsing others, or I don't know what you call that, but we're starting to see that. And so when we think about this time of year and we're thinking about our taxes, that's an important part. Where do these candidates stand as it relates to your back pocket? How is it going to
absolutely,
affect you?
absolutely.
Yeah. So tell us, with the work with the churches, and when you were talking about, I don't know, you may have mentioned the name of the workshop you went, but I went to one of these Chickwood. I think it's,
I've
um,
done that as well.
huh?
I've done Chipwood as well, and when you go to that, it's actually pretty frightening.
It's pretty what?
It can be pretty frightening when you hear
Yes.
some of the cases that they've been involved in, and some of the penalties that have been applied and assessed against churches for non-compliance and those types of things. So it can be pretty frightening.
Well, I'm gonna tell you what happened with me. So what happens in a lot of our churches? So someone new comes along, joins the church, and then they find out that you have an accounting background. Oh, well, you need to be the treasurer. I mean, yeah, that's just automatic. Hey, we're gonna make you a trustee. We're gonna make you the treasurer. And I was trying to tell them things that they needed to change and that type of thing. And they just was like, they were fighting me on it. No, we've always
Yeah,
done it this way. And then I took about a half a dozen of them to a Chitwood seminar.
there you go.
And he's scared to bejeebies. And they're like, okay, we're gonna make some changes now. We're gonna make some changes. So,
Absolutely.
but it's very important, because for a while there, the IRS was really going after churches, especially mega churches, in terms of kind of considered them low hanging fruit, because churches tended to do their own thing, and not accounting for different things the proper way. And so I'm sure your clients find you very valuable in that area.
Yes.
Good. So the topic tonight, and what we want to get into is we want to get into a little bit about the taxes. I mean, we're sitting here on March 22nd, and I think the deadline is either the 18th, 19th, something
Yes.
like that.
Yeah, the deadline for this year for filing your 2021 tax return is April the 18th, with the exception of Massachusetts, which has April the 19th as their deadline because of Patriots Day. So they got an extra day in Massachusetts in order to observe Patriots Day.
Okay, so April 18th. So I probably don't want to wait until April 17th to start getting my taxes together.
Yeah, that would not be wise.
Huh?
That would not be wise.
That would not be wise. So what is some of the common things? I know some of the things, Timothy, that I see when I'm talking to people. And again, like I said, back in the day, I used to do a few tax returns. I started as a volunteer with a program called VITA. It was voluntary income tax form. We were trained by the IRS, and we would go to, really, it was based out of churches. And we go and we do free tax returns for people if they qualified, like they were under a certain income limit and that type of thing. So, a little bit of background there. But here's the question that I had is I run into people and I'll ask them, in what I do in terms of helping them with their finances is, how did they file for their taxes? And I run into a lot of people who are married but are filing separate.
Yes.
And my immediate reaction, and again, this is from a novice standpoint, is like, well, you're putting yourself in the highest tax bracket there is. Married filing separate, at least as far as my memory goes, is the highest bracket. So does that make sense for people to do? Talk to us a little bit about married filing joint versus married filing separate.
Yeah. Well, first of all, you bring up the point of the tax schedule for married filing separately. The tax schedule for married filing separately is the equivalent of the tax schedule for single, which is the highest income tax bracket compared to the other option that you have to file from. So if you do married filing separately, you are in essence taxing your income based upon the highest tax schedule. Now we have a graduated tax schedule, which means your first dollar of income to a certain threshold is taxed at a certain percentage. Your next group of dollars is taxed at a different percentage, and that continues to graduate up, starting at 10%, going up to as high as 37%. So when you file married filing separately, you use, in essence, the single filing tax table, which has the lowest income and the increase in the tax percentage grows faster based upon that income level compared to married filing jointly. But there may be some reasons to file separately if someone is involved in a business activity and want to hold their spouse not liable for that activity, then that may make sense to file separately in those types of situations. So, because if you file married filing jointly, then you both are responsible for whatever is presented on that tax return. So there are some situations where it would be appropriate to file married filing separately, but you will be taxed at a higher rate because you use a different tax table to calculate your taxes when you file married filing separately.
So those windows are smaller before you go to the next tax bracket up.
That is correct.
Okay, got it. Now, it's interesting because in this business too, sometimes we run into people and they have to go and file an injured spouse claim where and that's a situation where, you file a joint return, but because of filing a joint return, one of those spouses in there had some issues or something. And so you ended up, so you would have gotten a refund if you filed on your own, but because you filed together and they owed back taxes or something like that, they have to go through the injured spouse process, which I imagine now probably doesn't happen real quick. Just like everything else is slowed down because people just don't have enough staff and all those types of things.
Yes.
So,
and I find that can actually entail going to tax court to actually plead your case in terms of explaining how you are the injured spouse and those types of things. So it can be a very lengthy process.
yeah. And so why go down that road?
Exactly.
If you know that you have those issues. But I think it's just being wise if you don't have any extenuating circumstances like that, to make sure that you're filing at the correct status. Now the other thing is, then I used to use people to tell me, well, I have a dependent. Well, what's your dependent's name? Chester. Who's Chester? He's my cat. Let's talk about dependents on the tax return. I want to say this to folks too, that this is a relevant conversation for us, even as we get into next week, where we're going to be talking about financial aid, because of much of your financial aid on the FAFSA has to do with the information that appears on your tax return. And so it's by design that we're going to talk about these 2 weeks in a row. But go ahead, Tim. Tell us a little bit about dependents. What should we be looking out for? There's some red flags that the IRS looks for. So talk to us.
Well, definitely when there's a red flag, if that tax or Social Security number appears on multiple tax returns. So that creates a tremendous issue for the legitimate person that's filing for that dependent. So in order for a person to be claimed as a dependent, it could be your child or it could be a qualifying relative. So there are certain questions that can be asked in terms of identifying if that person qualifies as your child dependent or as a qualifying a qualifying relative. So in the process of asking those questions, you will determine if that person do actually qualify and can be added to your tax return as part of your dependents. Now, one of the things I want to share with you is that if you're married, your spouse cannot be your dependent. And you're filing jointly, your spouse cannot be your dependent. You're either married, filing jointly or separately, and that spouse cannot be your dependent. So making sure you identify those dependents is very important. And, having that Social Security number linked with that tax return is the loop that will be closed when that return is filed to the Internal Revenue Service, and they match the tax ID numbers or the Social Security numbers with any other tax returns that are filed. So if there is multiple hits or multiple tax returns, then that creates a red flag.
So with the dependents, Timothy, when you mentioned something I think is interesting in my guess, and if you guys have questions, I do want to make this clear. If you have questions, put them in the chat. We're going to try to answer as many questions as we can tonight. But you talked about a qualifying relative. Now, I've always kind of, when you think about a dependent, most of the time we're thinking about support.
Mm-hmm.
So let's talk about if someone can be in your home and you're providing food, shelter, and all that. Are there situations where that happens and that person still is not a dependent? And then what about vice versa? Someone is away, don't live in your home, but you're still providing support. Can they be a dependent? Or how does all that work?
Yeah, in the latter response, the classic example is your child that may be off in school. So they are still your dependent. You're providing financial support for them while they're away from school. They're not currently living in your home if they are away from school and they, are staying on campus or have housing elsewhere at their respective, college. So in that case, they are still claimed as your dependent as long as they're in school. And there are certain tests that you have to satisfy in terms of the race relationship test, the income test, those types of things in order to determine if they are your dependent. As it relates to the qualifying relative, I mean, this could be a parent that has come to stay with you now that could potentially qualify as a qualifying resident that you are providing care for and those types of things. And the questions that are asked are fewer in terms of identifying that qualifying relative when you look at the hierarchy of how that is determined. But, a parent, or it could be, an aunt, an uncle, or, those types of things that could also qualify a relative as your dependent.
Hey, I never thought about this, but this just kind of came up in my mind as we're talking about that. What if you have a relative? I'm asking these what if scenarios, right? And so, what if you have a relative that maybe is in a nursing home or nursing facility, and you are paying for the cost of that? Can that relative, that parent, can that person be then deemed a dependent for you if you're helping to cover the cost of that?
Yes, you're helping to take care of the cost of that particular relative. And in addition to that, you have the child and dependent care credit that may also qualify for, that you may also qualify for. So
Awesome.
just as you pay for daycare for a child, you could also have those types of dependent care expenses for a qualifying relative.
Well, let's talk about that since we're here. Dependent care,
Yes,
like parents that are paying for child care, and then elder care, which
and
has
elder care.
become more popular, right? Um, and but you mentioned, because I think there's two types of credits, right? I I don't want to get too far in the weeds, but there's credits that reduce your tax bill, and then there's credits that could actually put cash in your hands.
Yes.
What's the difference?
So you have two types of credits. They are refundable credits. Those are the credits that can actually generate a refund for you. And then there are non-refundable credits that can actually reduce your tax liability, but only to the level of zero and not create an actual refund. So when you look at the refundable credits, those are credits that you are able to claim that can actually generate a refund for you. So if you have a situation where you owe taxes, let's say you owed $100 in taxes, but you had a refundable credit that was worth $500. So in that case, you could claim the credit, wipe away the $100 in taxes that you owe, and create an actual refund of $400 if you had a $500 refundable credit. To the contrary, if that credit was a non-refundable credit, then if you owed $100 in taxes and you had this $500 credit, the non-refundable credit will only eliminate that tax liability. So it would bring your tax liability from being 100 down to zero, but it would not generate an actual refund for you if the credit is a non-refundable credit.
So I'm thinking about things like earned income credit. I mean
Yes,
that was one of the credits that I remember that was a refundable credit. Like people were
that
getting,
is refundable.
they were getting, refunds because of the earned income credit. I don't know about some of the others, child care credit. I mean, I don't think they even had the child care credit when my kids were little. I don't think that even existed. I've been collecting, right? I've been
Yes,
collecting. I don't think they had it. So, but that's good to know that there's different things. Now, when we start talking about credits and we start talking about things, my mind went to the stimulus checks.
yes.
Let's talk about the stimulus check. Well, there's two things I want to talk about. I want to ask you about. I want to ask about the stimulus checks because everybody was getting these stimulus checks. I think there were more stimulus checks were in 2019 or 2020 rather than 2021. I don't know.
Yes, that was one that came through in 2021.
One in 2021.
Yes.
So then those stimulus checks are reportable income or non-reportable?
I will read you what it says from the publication. It says the economic impact payment. An economic impact payment is not considered income on your federal income taxes. So it is not considered taxable for 2021.
Okay. Awesome. Now, what about things like the increased unemployment? Because one of the things that we talk about, and I talk about on my radio show a lot, is this great resignation, right? Where people they were furloughed, they were laid off, they're working from home because of COVID, and now things are opening up. I think Goldman Sachs even said came out and said everybody had to report to work. Well, I think it was something like 50% of the people didn't show up, right? Because people are saying, I'm going to work from home or these type of things. So what about the unemployment situation? Was that reportable income or is it vary from state to state?
Federally, unemployment is taxable from a federal standpoint. Okay. So your unemployment income or income you receive from unemployment is considered taxable.
Okay. So a lot of this where people were receiving extra help, and I understood it was needed, that some of that is going to end up being taxed. Yes. And if you haven't filed because sometimes people forget to file, right? Sometimes people forget to file. So make sure that when you go back and file, you're correctly reporting your income, So of course, wages is income.
And that's a big red flag, not capturing all reportable income. Because when you get that 1099-G for your unemployment benefits, that's being reported to the Internal Revenue Service. Also, if you get, any 1099 forms like miscellaneous, non-employee compensation, the NEC, all of those items are being reported to the Internal Revenue Service. So it behooves you to capture that as reportable income on your tax return because they have records of those.
Now, I want to ask you. I want to ask you about it was something that came out that talked about if you're collecting money through PayPal, what are some of the other Cash App?
Yes.
And I think there was a threshold of like $600 or something like that. So is there anything you tell us a little bit about that?
Yeah, there's that 1099K that is now being generated. Yes.
Okay.
To report those Cash App and Zelle and Venmo and those type of transactions. So yes, that is now being captured.
Okay. So is the threshold $600?
That is my understanding that yes.
Okay.
$600 is the threshold.
So if I get a 1099K, that means that I need to be reporting that income because it's being reported to the IRS.
It's being reported to the IRS.
So, because I think that's where a lot of people were really, making money unreportable because they were getting it through Cash App, they were getting it through different resources like that, and they weren't reporting the income. Yeah. And so they closed that loophole. Let's while we're on dependency, I see Alice Martin asked a question. Who claims a working dependent child, you or the child himself?
Okay. There is an income threshold when it comes to a dependent child. So the child stays with you as long as you provide more than 50% of the financial need for that child, then the parent should claim that child. However, if the child paid taxes or had taxes withheld and want to capture a refund, he or she would need to still file a tax return to get that refund. But you would check the box saying, I am claimed as a dependent on another tax return, so that that number does not show up as, you know, a person filing a tax return claiming themselves on that return. So there's a
Fraudulent.
box to
Yeah.
check to say that I am claimed as a dependent on another return.
Yeah. Well, and I remember too, certain candidates that were running for political office, high political office, were claiming that people were claiming, dead people's on their Social Security, on their taxes, and all this kind of crazy stuff too. So, so that's interesting. I had another question, but and I lost my train of the question actually, but we had another question in the chat. It's like how to check for that form 1099K if they don't send you one.
Well, I would say that you should expect to see one from the financial institution. So if you trigger that, that's something that that institution will send out to you. Because you realize that with some of these apps, you're not necessarily selling anything. It may be, let's say you went out to dinner and you are paying back someone that paid for your dinner. So in that case, it's a cash app transaction or electronic transaction, but it's not like you are actually selling, or that's not necessarily income to report. So I would say you should receive that form from the financial institution, and if that's the case, then you should report that.
Right. So Robin asked kind of the same thing. It's like if I send money to a relative for personal needs, or you used the example of dinner,
Yes.
And she asked, does that person have to claim that money as for income?
I would say in that case, it would not be something that would be included. I would not recommend reporting that, because you're not engaged in a trade or business. It's not like you were providing services in exchange for those funds.
Okay.
So in that case,
and that's why a lot of times, even with PayPal, they say, well, send it as a gift and not as a sale. And, people try to get you to do those type of things. And, this kind of reminds me of something, and you can correct me if I'm wrong, but, and we use this strategy a lot in our generational wealth planning, that an individual can give up to, at one point, it was about $13,000 to any individual that you want, and that's not taxed.
That is correct.
Right?
I think that is going up now, but yes.
And like I said, I'm probably dating myself a few years. So I can give anybody I want up to $13,000, and that's not a taxable gift to them. So, and that's per person. And so there's times when we've used that strategy where someone wants to kind of spend down some of their money. So mom can give 13,000 to the daughter. The dad can give 13,000 to the daughter. So that's 26,000. And we could do that to each of our kids and actually start to give that money now, and it be not taxed. Because if it comes down to when death occurs and it's a cash that goes over, then we could exceed that amount. So those are all part of the planning. I always think is how would they even know? I mean, if I gave $13,000, $14,000, $15,000. Well, let me change that. Let's just say my kids gave me $25,000. How would anybody even know that to make it reported? It's probably pretty hard to track, I would guess.
Well, it may depend on how that gift was transmitted. If it was done, financially transferred, like a wire transfer from one bank to another bank, or to one account to another, that may trigger a transaction recorded because of the size of that dollar amount.
Okay. Well, I'm just gonna put this out there. If my kids are looking, if y'all ready to give dad $25,000, just bring it in cash. It can be cash bills. It can be, and you can put it in a paper sack if you want it to. Just bring it
That's
over
right.
in cash. There you go. Bring it over in cash. That's what I'm looking for right there. All right. So
But while
very,
we're talking
very
about that,
good,
if you
very good
recall,
information.
a few weeks ago, the director of Black Panther was in Atlanta at a bank making a withdrawal, a sizable withdrawal, and it hit that threshold, and they alerted the authorities because of the size of his withdrawal. He was withdrawing money from his account, but because it hit that threshold, they were questioning that particular transaction. So that dollar limits actually can trigger inquiries of that nature.
Well, and even from our ethics and the things that we have to do
Yes,
for working with people is that $10,000 transaction, that threshold in terms of a cash transaction. Now, if it's
yes,
a check, cashier's check, wire transfer, we're okay. But if somebody came in to if somebody came to me, sat down to do a policy or to do annuity or retirement plan, and they brought $10,000 cash and set on my table. First of all, you pick me up off the floor because that just doesn't happen. But
that
the
doesn't
other
happen.
thing is, I would have to do there's special reporting that I would have to do because of that being a sizable cash transaction.
Yes,
So those are all things to think about. Now, here's the other thing, Timothy, that I wanted to got. Wow, it's almost went by really fast. Um, Here's the other thing: is charitable contributions. Like we used to really kind of push, charitable contributions, and we believe, depending on your faith, you may be a tither, right? So charitable contributions given to goodwill, all these type of things that would increase our itemized deductions
yes,
versus now we have the standard deductions that seem to make it harder to qualify for itemized deduction. Talk to us a little bit about the standard deduction versus itemized deduction.
yes. And I'm glad you mentioned that because with the tax laws that came out in 2017, 2018, the standard deduction amounts were increased pretty sizable. And so what that meant was individuals that were previously accustomed to filing and itemizing their deductions. Because when you think about itemized deduction versus standard deduction, you take the greater of the two. Because what happens with that particular deduction is when you look at the way the 1040 is structured, once you determine your adjusted gross income, that standard deduction or itemized deduction is subtracted from your adjusted gross income to arrive at your taxable income. So that's the amount of income that you're actually taxed on. So you want to subtract from that adjusted gross income the greater of the two, the standard deduction or your itemized deduction. So when the standard deductions amounts were increased, it was more difficult for certain individuals to have enough deductions so that they were able to itemize. And some of those deductions include, your state and local income taxes, your property taxes, charitable contributions, donations to like Goodwill, Salvation Army, those types of things. So those deductions, when the standard deductions were increased, it was harder to reach that limit so that you were able to then itemize.
So a lot of those thresholds were I mean, because that threshold or the amount of the standardized deduction was so high. And then I think even, we were thinking about it used to be, and I'm gonna really date myself now. Back in the day, you could deduct interest on any loan that you made.
Yeah,
And then
you're dating yourself now for real.
yeah, and then it was any loan. I mean, credit card, any loan
Credit
you could
cards, yep,
deduct. And then it went to student loans and mortgage.
yes,
And I think those are still, I don't know if student loans are still there. I know mortgage is still there, but it's got to be pretty substantial that along with any other itemized deductions that you're doing to really break those thresholds down.
Exactly.
Now, everyone gets the standardized deduction, whether you're claimed on someone else's tax return. So I could file a tax return, not claim myself, and still get the standardized deduction. And so that would allow me to, or if I have a child, they could make up to that standardized deduction and really pay no taxes on that money.
Right.
So it's a
Right.
great idea to hire your children to even work in your business, right? Legitimately, right?
Legitimately,
And you can pay
at,
them
at,
up.
at a reasonable wage. So you can't pay them, an exorbitant wage to try to reduce your income. So it needs to be reasonable for the services that they are rendering.
Okay. So like, my grandson is helping me stuff books in an envelope, right?
Right.
So I can't pay him $100 per book.
That's right.
Okay, gotcha. All right. But it becomes a write-off for you as a business owner. And then for them, it's going to be non-reportable income because it's under the standardized deduction amount. So that is a strategy as a business owner that you can reduce. And you mentioned your kid away from school, right? So if you have a child that's away at school and you are sending them money, cash apping and all this kind of stuff, if you could put them on a payroll and be sending them that same amount of money and deducting it as a legitimate. I mean, they got to be doing something for you, right? I mean, we got to preference this, but they got to be doing something for us. Which brings me to, a couple last points is I feel like, and we talk a lot about entrepreneurship here at the Real Money Coach. I mean, and to the degree sometimes I think I almost feel bad, but it's nothing wrong with having a regular job. Let me just say that. That's what I really want to say. But we do push entrepreneurship. Whether that is you're an entrepreneur on your own or whether you're an entrepreneur in addition to your job. But part of the reason why we feel like that is so important is because the way the tax laws are written today, that's where you have the most opportunity for deductions and that type of thing. So talk to us a little bit about really business deductions. And then I even would love for you to touch a little bit on home-based business, home office deduction.
Yes. Well, when you start talking about those business deductions, the first thing I want to mention is that those deductions need to be ordinary and necessary in order to engage in that business activity. So it's not like a free for all that you can just, purchase anything through the business and just write it off. So they need to be ordinary and necessary in order to be truly legitimate business deductions. But what that does, it allows you to reduce your net income, which flows through onto this, well, depending on what type of structure you have. If you are a pass-through type entity, that means that the income that you generate passes through to your 1040 and is reported on your 1040. So when you declare those business expenses, then that reduces the net income that flows to your 1040 that you're actually taxed on. And then as you talk about the home office deductions, those deductions are specific to the business use of your home. You have to have designated space that you exercise that business or that you execute your business activity in, and you're able to deduct a portion of your expenses related to the home for operating that business out of your home. And then if you have any special repairs done to that business space, then that is deducted, say 100%. Let's say if you were, building your home office and you were installing, a true fixture to the home in terms of a desk with uh, bookcases, those types of things. That might be a customization that would be specific to that home office and would be fully deductible. Whereas, let's say your utility bill is only deductible for the portion of that house that contains the space that you actually conduct your business in. So if you have a 3,000 square foot house and the office is 900 square feet or 1,000, not 1,000, but let's say 300 square feet, then you get to claim that percentage of that home office to the whole home as a deduction for those utilities or those types of expenses.
Got it. Got it. So, in other words, too, nail that desk to the wall. So it's a Listen, we got someone to ask a very great question. A business like Hyperverse, okay, and Hyperverse is one of the crypto blockchain platforms that is considered a home-based business. Are you able to claim items associated with running it?
If you're engaged in that activity to make money, then that would be a business that you would be able to declare, ordinary and necessary business expenses.
Well, here's the interesting part about that to me. I think when we get into something like Hyperverse, which is an awesome opportunity, right? So if anyone's interested, you can let us know. But with the Hyperverse, you're not actually pulling any income out because it's kind of it's all, we're operating everything in cryptocurrency. And so if you're not pulling any of that out, you're not realizing any income. And so it really kind of becomes one of those things where, to me, this is just my opinion. So you guys, this is what it is. If you're in something like Hyperverse, and there's others, right? Novatech, there's different ones. If you're in it from the investment standpoint, then that's an investment for you. And then, of course, if you hold those assets more than 13 months, then it becomes long-term gain.
Yeah.
But if you're in it and you're building it more than just an investor on your own, now it's a business where you're actually bringing and recruiting other people into that opportunity. Now it's a business. But if you're just in it and you just put your money in it, and you're not really actively trying to get others in it, then to me, that's more of an investment than a business. That's just kind of my twist on it.
Yeah, I would agree with you on that.
Cynthia and Lisa said, of course you guys would agree. So, but that's a great question. Thank you for whoever asked that question. So now, Timothy, here it is. We're at 9:06 p.m. and let's imagine it's it's now April 18th at 9:06 p.m. and I don't have time to get this tax return done. What do I do?
Well, interesting you asked that question. There is Form 4868, which is extension of time to file the tax return. But notice the name of that file, extension of time to file the tax return. If you owe taxes, is not an extension of time to pay the taxes.
It's just
It's
an extension
only
to
an
file.
extension of time to file the tax return. And it's an automatic 6-month extension to like October the 15th.
Okay.
But if you owe taxes, it's not an extension of time to pay the taxes.
So technically, what should happen, technically, according to the rule of the law, is if I know I'm on owe taxes, I should go ahead and send that check in with that extension and then settle up within that 6-month period of time.
Yes.
In reality, that's probably not what happens most of the time.
Yes. Most people file the extension without the payment and then will be charged interest. And then you have like the late filing penalty and the late payment penalty that could be assessed.
Okay. So that's very, very
Failure
distinguishable.
to file and failure to pay are the two penalties that could be assessed if you don't do it the proper way.
And rapid refund. I mean, I know people that love the rapid refund. So tell us, so I filed my taxes, I can get an immediate refund or rapid refund. Tell us a little bit about that piece.
Well, rapid refund, I'm sure is convenient for some people. However, think about it, if you're getting a refund that's quite sizable, what that means in terms of where your money has been sitting for the past 12 months. You've basically loaned that money to the federal government for 12 months, practically interest free.
Right.
And so when you get those large refunds, it would be thought provoking or wise to consider adjusting your withholding so that you are able to retain more of your income throughout the year and not have, such a sizable refund so that you get the benefit of those funds throughout the year as opposed to waiting to get it back, you know, 12 to
Absolutely.
16 months later.
Absolutely. And I'm glad you brought that out. I was hoping we'd go there. But if you're getting, let's just say if we were to use a round number, let's say you're getting a $3,600 refund. I mean, that's really $300 a month of your money that you've loaned to the IRS, interest free, that you could be using that for other things. It could be used for debt reduction. It could be used for investing. It could be used for a number of different things rather than letting the U.S. Treasury hang on to it and then give that back to you, not a year later, but in many cases, 16, 18 months
Exactly.
later.
Exactly.
So great point. Great point. So Timothy, if someone wanted to get a hold of you, they want to get in touch with you. Maybe they want to get their taxes done. How do we do that?
Well, email is probably the easiest way to reach me. And I'll give you that email address is dayfinancialenterprise@gmail.com.
All right. So Dave Financial
Enterprise
Enterprise at
at gmail.com.
gmail.com.
DAYE, that is.
There we go.
There we go.
Dave Financial Enterprises at gmail.com.
Yes.
Well, Timothy, man, I certainly appreciate you taking the time to be on the show, sharing all this information. If you guys got anything out of it tonight, just put it in the chat. Let us know that it was good information. And when we start talking about things like taxes and all this stuff, I mean, it's not the glamour, right? But it is very important information that we need. And you dropped some nuggets for us tonight. We appreciate that. Appreciate you being part of the show. I appreciate you being part of the team.
Absolutely.
Appreciate friendship and all that great stuff. You and Cynthia are a wonderful, wonderful couple. So we do enjoy, Lisa and I enjoy spending time with you guys. I know that doesn't happen between January and April. You're busy doing taxes, but we go make sure that after April we go get together and enjoy it and all that good stuff. Any last words before we sign off?
Well, as you said, we're about 17, 18 days away to the tax filing deadline. So get your information together, get it filed. Don't be assessed late filing or late payment penalties. So get your information together and get it in.
All right. You guys heard it from Daye Financial Enterprise. I love that. So make sure you get your tax return in. Make sure you file it. Don't be claiming your cat. Don't you do it. Don't you do it.
Don't do it.
Don't you do it. So we appreciate it. Look, Robin said great information. Alice says I'm much more informed. Thank you so much. That's why we do it. That's why we come on every Tuesday night to give you guys great information. And with that, we're going to sign off and we will see you. I won't see you. We'll hear each other. You'll hear me on Friday at 5 p.m. Eastern Time on iHeartRadio, WDRB Media. And we'll see you right back here next week on Tuesday on Real Money Coach Live Show. Have a great evening.